All right, folks. Welcome to this week's Forex commentary and market review. Here's it on next on the monthly time frame, and you know, hallelujah. DXY is very close to objective. We've been pointing out this level for almost a year now, and to finally see the markets are pricing into objective. It's a nice thing to observe, but also, you know, it's also sad that I couldn't capitalize on the opportunities that came with the markets trading into this level like I would have loved to. Okay, I barely made money here, probably until this particular week. I mean, that's when I started making money again trading forex. So this is the obvious drawn liquidity, and we've always wanted to see DXY returning to the range, and majority of the time the analysis was basically marking out this high and this low and expecting the market to return to premium, and everything that's premium, it's you know above 50%, and we're looking at the complete closure of this inefficiency and potentially the markets trading into this fair value gap. So that's basically the analysis on the monthly time frame, because we're going to be seeing this month's candle close in about 3 days. That should be like on Tuesday ish next week, if I'm not mistaken. And might start asking ourselves the question of where is the market's going to go as soon as they trade into objective, because the primary objective is 101977. That's the entry into this inefficiency, right? And you know that's where we want to wait. We want to observe price action, etc. Right? But seeing that the markets are yet to be in premium at the entry into this inefficiency, which may, of course, cause some near-term rejection. I think the markets are going to completely rebalance this, this sell-side imbalance, buy-side inefficiency, this fair value gap here. So, on the weekly time frame, for the first time in a while, we've seen, the markets trend in 2 consecutive weeks, and to say that this isn't common. You can look at all of the price action for weeks. You can see the markets aren't exactly trending like this, where they quickly set the low of the week and expand quickly. All right, so that's what we saw in this past weekend. Maybe that's one of the reasons why I made money, because in subsequent weeks it takes a while for the analysis to pan out. Okay, for example, we talked about DXY many times, you know, on the past month, where we said we want to see them stay above this inefficiency here, and that would qualify longs for the monthly fair value gap. And it's kind of like interesting because we had DXY here. Ideally, we should just see a continuation here, and we went bearish. We said we should wait, but all of this stuff, right? And market hasn't been very consistent with price delivery. Market is rather being consolidation, and we've only seen very good price action this week on euro, right? And I'm thinking that markets are going to open next week and make a continuation into this monthly inefficiency, right? And potentially we could see them reach for the 50%, the midpoint of this inefficiency, and then completely rebalance this inefficiency. I have a side thought that we are likely to trade into this premium monthly gap, but I'm not trying to get ahead of myself now. But because this is as much as I can see currently in terms of where DXY is likely to go. I think DXY is absolutely going to reach for 103197. So if there was a commentary last week, the things I would have said would be, we're likely to see the market make a retest of this old volume imbalance and expand into the buy side. I mean, these were my thoughts process at the start of the week, and as always, we would like to observe Monday's trading, right? And Monday's trading was bullish, okay, and that changed that changed everything. Since Monday was bullish, and the weekly bias is bullish. There's a sponsorship in line of the weekly bias, like we'd call it, and Tuesday was likely to make a continuation. And if you look at correlated pairs or asset like euro, pound, it's going to give you more insights to why you might want to take a position on Tuesday and try to hold until the market reaches for objective here, or the rejection block here. All right, so that was basically price action for Monday, Tuesday, Wednesday. Market got to rejection block and returned into the range. I mean, Friday is really interesting because as soon as the market created this inefficiency and market made a retest of it on Thursday, Friday would be bullish, right? I mean, when you look at this kind of price action prior to Friday, it's very easy to say it's bullish, and absolutely it's bullish. But because of the narrative that Friday is meant to be bullish, this market will always do what they're gonna do. They try to consolidate by completely rebalancing this inefficiency. Mind you, the drawn liquidity is here 101977. The markets were very close to objective. Market returning to this gap, you think, okay, they want to quickly reach for this inefficiency, and dollar index was just doing dollar index things by completely rebalancing this inefficiency and creating a setup towards the end of the London close session. So this look like this is price action around dollar index on Friday. That was yesterday, and on the 30-minute time frame, because now that we have sponsorship in line with the weekly bias is bullish. The market returned into the range to completely rebalance the intra-week inefficiency, and you can see the market ran into it. There was a change in the stating delivery, market structure shift, fair value gap. This was a good setup on Friday. Okay, this is post London close setup, and it was beautiful because I took a trade also again yesterday. I mean, for the first time in a very long time, because this this market has stripped me of my ability to even trust what I'm even thinking, right? I think all of the analysis we talked about on the YouTube channel, absolutely everything panned out. I mean, gold, silver, dollar index, but price action was absolutely crazy. And because of that, I could hardly trust the 4-hour time frame setups, and missing lots of trades and barely taking any trades. And when you take that one trade, you take a loss, and I'm done. Because when I observe that the markets aren't in my favor, I just simply just minimize my risk by reducing frequency. That's the only way I can minimize risk, right? So basically, the reason why I'm talking about this setup on the 30-minute time frame is because of our expectation for Monday's trading, right? I think the markets are going to open bullish because we've completely rebalanced inefficiency, and this is the draw on liquidity. Coupled with the fact that we already have a bullish market structure shift here, so we're likely to see upside on the XY. I mean, it'd be beautiful if we can. I simply do not want to predict Sunday market open, but this auto block here would have been high probability for Sunday's setup, because I don't know if Sunday market is going to open with a gap. I don't know if Sunday market is just start consolidating, returning back into the range. Okay, I absolutely do not know what Sunday is going to look like, but I think that anyone who managed to get a trade here from this fair value gap or buying this bullish auto block has a fair chance at capitalizing on the expansion in the new week. So dollar next still bullish. This is our primary objective for the week. Primary objective, and when dollar next reaches the entry into the monthly fair value gap, this is where I want to wait. This is where I want to observe. But what that price action would look like if DXY tries to reach for this level here would mean all of these consecutive downward candle, they become auto block. And since we said there's a high propensity the markets are going to reach for the midpoint of the inefficiency and potentially completely rebalance this monthly gap, these consecutive down close candle are likely to serve as bullish auto block, and if the market reaches here and probably makes a retracement into these levels, you can absolutely consider it for longs on dollar index into more buy side objectives. So this is euro. This is euro, and on the monthly time frame, the quarterly time frame was where we did all this analysis and talked about the whole consolidation, talked about this inefficiency, and I think this up candle here prior to this run lower, the run on liquidity here, that's the breaker. Okay, so that's the breaker, and if that's the breaker, I think the market are likely to reach for the breaker here. Okay, I think this is the draw on liquidity, the secondary objective after the market runs into this inefficiency. And if we take the fib from this low to this range here, this is close to 50%. Okay, it's not 50%, it's about, say, 40%, because if this is 50%, from here to here is about 40% ish. Yeah, because that's 61.8, maybe like 38.2%. Okay, this is about 38.2%. Also, if my calculations are not wrong. Okay, let me do it here. Okay, probably 40% ish of the inefficiency. That's 38.2. Wow, yeah, that's correct. That's about 38.2%. I don't think I made a mistake with that. It just seemed too fast. So so we have this level here. I expect the markets to eventually trade into this breaker here. Potentially they could reach for here, but this is the high of the breaker is what I'm eyeballing. Okay, and now market has sell side and not just having sell side. Let's go to the daily time frame. The markets took out sell side, returned into the range. Okay, returned into the range, completely rebalanced this inefficiency, and I think we're set for a continuation, because you can see Friday's candle close inside Thursday's range, inside Wednesday bearish range. So I think we could see Monday just continue this downward momentum, and like I said, if we have a bearish Monday and we stay below this consecutive uplift candle, that's our confirmation for Tuesday short. If the market makes a retracement into a 4-hour time from PD area or into this daily bearish order blocks and stuff. So we have the market respect this bearish inefficiency. Okay, and what we're thinking is, okay, the market still has secondary objectives after market took out sell side here. Okay, if you notice, euro has sell side, dollar index doesn't have buy side yet. So when you think about it, okay, it only makes sense that if DXY has other objective, it means euro has objective too. And if you look at the chart, okay, you can see that we have this rejection block here. You can see this rejection block here. We have this rejection block here. All right, so the markets are likely to draw into this rejection block first, and then potentially we could see them attack sell side, and sell side overlaps the monthly breaker. So we have that outlined, and the 4-hour time frame, we have this up candle here, we have this inefficiency here. Market closes through this inefficiency, makes a retest, that's something, but early sellers would be selling off of this bearish order block. Or on the 30 minutes time frame, we can see this one. It's a very similar price action with dollar index. We have this 13 minutes change in steam delivery, return to fair value gap, and then this is first entry. Second entry would be the retest of this bearish order block, the order block formed at the breaker, and the retest of it, or the trade back into it. All right, and we're likely to see the markets try to reach for more sell side and more sell side objective. So that's my analysis on euro, my analysis on dollar index, And I hope you found this one insightful. Until I talk to you again, be safe.